Hi there. In this video, we explain how HMRC may use AI-powered audits in the UK and what this means for tax compliance.
Welcome. Today we are looking at the evolution of UK tax compliance. A freelance designer in Manchester finishes her self-assessment, checks her numbers and clicks submit. She is unaware her return was already audited by a machine. An algorithm identifies a £2,000 misclassified expense in seconds, triggering a compliance letter before a human inspector ever opens her file. This automation has shifted the scale of enforcement. In the 2024 to 2025 tax year, HMRC's Connect system generated £4.6 billion in additional tax yield through automated data matching alone. I am part of the advisory team at Fairview Accounting Services. In 2026, HMRC no longer waits to verify your figures after you submit them. The revenue is already tracking the baseline. The system cross-references your submitted tax file against more than 30 distinct external data sources. Because this digital dragnet is completely automated, surviving a modern audit requires your records to be matched to these external data trails before you ever file your return. To understand your defense, you must understand the engine. Connect functions as a central analytical hub, processing data at a scale impossible for human auditors. Connect ingests billions of data points to build a comprehensive map of a taxpayer's financial behavior. Traditional streams feed in first, PAYE records and direct bank account feeds. Then, modern gig economy platforms like Uber and Airbnb integrate, alongside cryptocurrency exchange reports. It also draws from official public records. Connect ensures that your personal declarations match your property data at the land registry and your corporate filings at Companies House. The algorithm searches for spurious behaviors, discrepancies between these external records and your filed income, to assign you a personalized risk score. Under current platform reporting rules, digital marketplaces are legally required to share your earnings data directly with the revenue. Omitting digital income is no longer a matter of chance. If a platform reports a payout that you do not declare, the system flags the anomaly with mathematical certainty. This data architecture creates specific pressure points for everyday taxpayers. Consider Jamie, a handyman who uses a mobile app to find local weekend jobs. Jamie earns £800 over the year. Because the amount is relatively small, he assumes it's too minor for the revenue to notice. However, the platform automatically reports that income. Connect links the £800 payout directly to Jamie's existing PAYR records. The trading allowance provides a £1,000 limit for undeclared side income, setting a hard technical boundary for what needs to be reported. The system distinguishes between casual sales, such as selling old household items, and taxable trading. Regular app-based work is classified by the AI as business revenue. Property owners utilizing short-term lets face a different algorithmic trap. Connect executes a direct cross-reference between land registry ownership data and the payouts from booking platforms. A frequent cause for flags in this sector is the misunderstanding that platform service charges are fully deductible. In practice, only the net profit is taxable. Casual side income and short-term lets are easily identifiable for the AI, turning minor administrative oversights into triggers for automated compliance letters. This system also prioritizes company directors and high earners who face risks created by the intersection of policy and automation. When tax thresholds remain static while wages rise, it creates a phenomenon known as fiscal drag. The Connect system is designed to identify taxpayers who cross these specific thresholds as they move into higher risk categories. The primary threshold, the personal allowance, is frozen at exactly £12,570. While this remains flat, average incomes climb. Crossing this static line pushes a director into the 40% bracket, triggering a new algorithmic profile. The pressure is increased by the dividend allowance being halved to just £500. These narrow margins make directors targets for predictive modeling. Once you cross these thresholds, the algorithm prioritizes your file for closer inspection. Small business owners involved in cryptocurrency are also monitored. Connect cross-references exchange reports with your filings. Gains exceeding the £3,000 annual exempt amount are systematically tracked as capital gains. Connect is programmed to prioritize investigations into businesses that maintain manual or paper-based records, as these are statistically more likely to contain discrepancies. Relying on traditional tax strategies during a period of frozen thresholds makes you mathematically vulnerable to an AI profile flag. It is important to know how to respond if HMRC initiates contact. Initial correspondence is often an automated nudge letter. This is an AI-generated prompt, rather than a full inquiry led by a human auditor. The letter asks you to verify specific data points where the system has detected a mismatch. When you receive one, use this 3-step protocol. Step 1. Log into your personal tax account within 30 days to identify the specific discrepancy the system has flagged. Step 2. Gather digital evidence to clarify the data point. You must provide clear documentation to address any algorithmic oversight or reporting error. Step 3. For complex structures or property income, consult a specialist to ensure your explanation aligns with the technical requirements of the revenue. Making tax digital becomes mandatory by April 2026. To prepare, categorize your expenses through API-synced software like Xero to maintain a real-time audit trail. Making a voluntary disclosure for an error before the system prompts you can reduce penalties from 100% of the tax owed to under 30%. Because the AI is entirely data-driven, your most effective defense is accurate, digital record-keeping that matches the external data the system is already receiving. This video provides general guidance on UK tax rules. Individual circumstances differ, and professional advice should be obtained before making financial decisions. You can manage your tax narrative. Contact Fairview Accounting Services today to ensure